The Apartment Gurus podcast is brought to you by Greenlight Equity Group, an apartment acquisitions and holdings firm co-founded by Carl York and Tate Siemer, host of this show. We offer you the opportunity to be an owner of cash-flowing, wealth-growing apartments without the headaches of being a landlord. These assets are recession-resistant, risk-mitigated, offer significant tax advantages, and are a great alternative to the stock market. Ready to check it out? Go to www.investwithgreenlight.com today to book a personal consultation with Carl or Tate. Again, that's investwithgreenlight.com. We look forward to meeting you. Welcome to The Apartment Gurus, where twice a week, host Tate Siemer brings you deep dive interviews with the wisest gurus in the apartment investing industry. These experts are sure to create game-changing value and inspiration designed to catapult your business to the next level. Be sure to reach out to Tate at www.investwithgreenlight.com for access to his investor portal and Calendly link. And now, here is Tate Siemer and the Apartment Gurus.
Welcome, everybody, back to another episode of the Apartment Gurus podcast. And we're coming at you today from the home base, Salt Lake City, Utah, where it is currently a beautiful late summer 80-ish degree day, some clouds in the sky. And you know, we're here at the end of August in 2023. We're recording this, and this is going to be another in a series of episodes that I've done with some fellow Raise Masters. And what's a Raise Master, you might ask? Well, we're all members of a mastermind that was put together by a gentleman named Hunter Thompson. And we have no official affiliation, just to be totally clear, but other than being members of the group. And I'm just a massive believer in masterminds in general. I run a mastermind, and I'm a member of a mastermind. I started this business as a member of a coaching mastermind with Corey Peterson. So this to me is these things are absolutely key and building your business. And so Raise Masters is wonderful because there's 430 members, and those are all high level capital raisers and deal makers and people doing big things in the industry, fund managers, that sort of stuff. So Param Singh is with me today, and Param is a fellow Raise Master and got an amazing story about going from 0 to 3,000 doors, over 3,000 doors in about 5 years. So that's just an incredible success story. Can't wait to hear more about it. So Param, welcome to the show, man. Really glad to have you.
Great. Thanks, Tate. Really happy to be on the show. You know, I've listened to a bunch of your episodes already. So, as a listener, so it's really cool for me it's an honor for me to be a guest on your show. So really happy to be here. Yeah.
I appreciate that. Appreciate you being a listener. And, we're just here to add as much value as we can. And so, so listeners, listen carefully, take some notes, I recommend always looking for 3 takeaways that you can take from anything, whether that's a podcast episode, an audio book, a webinar, a lecture series, whatever that is. Look for 3 things that you can take away today. So on that, Param, give us a little more of a look into you and your background and, your story. Sure. And kind of how you got to where you are today doing real estate at a really high level.
Sure. So I'll start with a little bit of my background. So I'm currently in San Antonio, Texas. So you mentioned late summer. So summer's definitely hanging on in Texas. So we're looking at 90 and 100 degree weather is still in August. Anyway, so we've been in San Antonio, Texas for the last 16 years. My background is really typical immigrant story, where my father came to the U.S. with less than $100 in his pocket, really set his sights on the typical American dream. So, he had that $100 and he made work of it, right? He worked hard, various jobs, put us through college. I have 2 sisters, and, so we became not only that we could have jobs, but we could be professionals and, have a career, right? Not just a job. So a good paying salary and bonuses and retirement accounts and the whole works. And so, that was kind of where we were headed. And so I've been doing that. I was for, as an executive at a global management consulting firm for the last 20 plus years, 24 years, working for that firm and specializing in the pharma and life science industry. So that's been kind of my background from an IT perspective, from a career standpoint. But as far as investing goes, my journey from investing, and my wife and I,
Wait,
both.
Can I interrupt you real quick?
Yeah.
Sorry, just to get clear, are you still doing your management consulting firm work?
No, I actually was able to quit that job this year.
Wow.
So
okay.
just a few months ago, and really it's been the stepping stone from doing all of this real estate investing over the past 5 years, getting to a point where I have enough passive income that I could walk away from my career. So after 25 years, I was able to do that this year. So that was a huge milestone for me.
Yeah, that is amazing. Congratulations.
Thank you.
That's a huge milestone for anyone. And I'm sure there's a lot of listeners out there that can relate to how good that would feel to be able to essentially retire yourself and do what you really want to do. So awesome. Okay.
Yeah, so the next goal is to retire my wife, right? So she's still working in her W-2 right now. And so I've focused my effort on growing our business. But how this all started was really, both my wife and I were consulting. And so we had, good paying jobs, and we, instead of every, pay increase that we had, every bonus that we had, instead of kind of, jumping our lifestyle, we were like, hey, let's invest, right? Let's invest. So we had that mindset. Thankfully, both of us were on the same page, and we started investing into as well as we knew how. So we started buying single family homes here and there, and doing that. That's where, kind of our journey started. And then I partnered up with.
When was that? What year was that?
We probably started investing way back in 2004. 2005. Oh, wow. That was our first single family home that we bought after, as an investment, as a short-term rental. Sure. Way before Airbnb was a thing. We actually bought a investment property in Florida, in Disney, around the Disney area.
Cool. Good for you.
And then, that did fine. It wasn't a great, kind of return, but it got us a step into investing. And then, we started looking at with my brother and partner, Rav. We had done a couple things together where we purchased some single family homes. Didn't really pan out. It was 2008, again, with everything that happened in that bubble, really didn't make out a whole lot. So we had a couple of steps, a couple of hiccups through that, but we still knew that real estate was where we wanted to be. Mm-hmm. And so Rav and I, we started to partner up. We bought a multifamily, a small multifamily. We sold all of our single family stuff. We're like, hey, what do we need to focus on? And so in 2016, 2017 is probably when we bought our first multifamily. We bought a 16 unit apartment. We sold all of our homes. We just focused on this one single, the 16 unit apartment in San Antonio. We didn't know what we were doing, right? Other than sort of the minimal experience that we had with single family, even though we had, had a property manager in those, and, because it was a far away management. And so we bought 16 units, tried to follow our own formula. Didn't really have any mentors, didn't really have anybody telling us what to do, but we knew the general, kind of formula of, hey, we need to increase rents. We need to, improve NOI, get that valuation up. And so that's what we did. And, we were the ones that got the calls at night, toilets busted, mailboxes broken. And so we would spend a lot of time kind of fixing up the place. But ultimately, we found out two things. One, we don't like to be property managers. I don't wish that on anybody that doesn't have that kind of time. I was still working full time. Rav was still working full time. And so, having the time to spend on that wasn't really, advantageous, right? So it led to a lot of challenges. But so we found that out really first and foremost. But second thing was, as you increase NOI, especially with multi-units, your valuation goes up pretty dramatically. So within 18 months, 24 months, we were able to raise the rents really modestly, but the valuation of our property went crazy. And so we ended up selling and more than doubling our equity within 2 years.
Wow.
And so,
nice.
That was a big aha moment for me, right? Because on single family, I could never do that. I could never have control over the value of my single family home. The market's going to dictate, price per square foot. That's all that dictates what the value of your home is, no matter what kind of income you're generating. But on commercial multifamily, even for a 16 unit, the bank was telling me, my appraisers were telling me, NOI is telling me what my property is worth. And so if I can raise rents just even a little bit across 16 units, that, dramatically changed the valuation of my property when I went to sell it. So that was a huge aha moment for me. And I was like, let's do it again. Right. So, we were still using our own money. So as far as we can go, we 1031 that. We got into a 52 unit property. So we went from 16 to 52. And this time we knew we weren't going to be the ones getting the calls, right? So we're like, let's hire a property manager. Let's get them in there. Let's get maintenance. We don't want to be the ones doing that. So we changed things we evolved every step of the way. And then same thing, modestly increase rents. And now you're multiplying that by 50 units, 52 units. So again, dramatic changes.
Scale.
And so we ended up selling that property and making a good ton of money. And this is just me and my partner at the time. And so this is when,
were you guys self-funding equity?
Self-funding, completely self-funding everything. Right. And this is when friends, family came out and said, "Hey man, you're being really successful. How do I get part of this? How do I join you on this journey?" And so at that time, they were giving us capital, and we were like, no, we're not ready for that yet. We don't know how to do that, because playing with your own money is one thing, and investing somebody else's and being a fiduciary to somebody else was a totally different animal. So we needed to educate ourselves. So we joined, masterminds. We're a big believer in masterminds as well. So we joined a couple of masterminds that taught us about the syndication model, right? Taught us how to do it well, linked us with proper syndication attorneys, right? So we can actually get the paperwork and make sure that we're, in compliance and all that. So, but we were into the new guys on the block. So, syndicating a deal, getting a broker to take you seriously, when you're talking about, multi-million-dollar properties wasn't that easy. So, thankfully we had some big hitters kind of take us under their wing and say, "Hey, why don't you kind of join us on a project? You bring your capital, you bring your expertise. You guys are good asset managers. Why don't we, do this thing together?" So we got an opportunity from a good partner to say, "Hey, why don't you join us on this big deal that you wouldn't be able to take on by yourself, but hey, you can contribute." So that was a huge thing. And this industry, and I'm sure you experience this too. I love this industry because there's so much more collaboration amongst people that are doing the same thing. And so they're not looking to you as potential competitor. They're looking at you as a potential partner. So that was a huge, kind of springboard to our success. And so, we went from, like I said, 0 to 16, 16 to 50. And then from that point on, when we got our first syndication, we launched our company in December of 2019. That was our first syndication. And it really accelerated our growth. So we went from 50 units again to over 3,000 in just that, 3.5 year window, because of these partnerships, because of syndication, because of the reach that we could have now that we have investors, we have capital, we can, go to larger projects that are less risk. And return across the board for our investors.
Isn't that interesting how the bigger institutional deals are less risky?
Absolutely.
There's 100%. There's a number of reasons for that. Tenant base, tenant class is one of those. But from just deferred maintenance and management and the whole 9 yards are just easier to get those bigger deals done.
Not only easier to get it done, but like what we found was, you talk about things like cash flow, right? When we were doing our own deals, we barely scratched the surface, right? To get some cash flow out of it because, one, we weren't necessarily doing it right where, we used all of our money to basically take down the deal. Yeah. And so we had nothing left over to actually do the rehab. So we were thinking we'll fund rehab and we'll fund maintenance out of cash flow, out of income. Right. And that, that sounds great on paper. It doesn't end up being so, even the first deal where, we ended up netting, again, more than doubling our equity, but while we held the property, we barely had any cash flow. Right. And so for us, that was fine because we knew that going in, we weren't expecting cash flow. I was still working full time. He was still working full time. So we're like, all right, every penny that we get in income, we'll put it back into the property and make it better. But when you're dealing with investor money, when we're doing with syndications, we better have cash flow, right? There better be some level of cash flow so we can actually do the regular distributions and kind of, so it's definitely easier to cash flow when you have bigger deals because like you said, economies of scale, your expenses, the debt that you're getting is non-recourse and things like that make that overall risk a lot lower.
Right. Yeah, that's a great, huge takeaway, no doubt. Awesome. So talk a little bit about what it was like to go from that first syndication, December 2019, to now with 3,000 doors. I mean, that's a big growth spurt, to say the least. So, talk about that. What was that like?
So I think we had a slightly different challenge than most capital raisers that start in the business where, a lot of capital raisers that I've spoken with, their focus is building that network, increasing that base and trying to generate the capital, right, that they can take to deals. If you recall, we kind of had the opposite problem initially where we had people willing to give us capital, but we didn't have deal flow, right? We didn't have deals and ourselves with partnerships. Like I said, sponsors and operators that really knew what they were doing, that were smarter than us at the time, right? And so we relied on that pretty heavily. And so our, there have been, obviously properties and projects that we've take down ourselves. We've brought, but we've looked for partners that, we have boots on the ground. We have, all of these kind of check boxes of what we need to make sure that a project goes right. And so it is a team sport, right? So aligning ourselves with people that know what they're doing operationally, have the relationships that are needed to do these things effectively. Those are the things that we started looking for because our investors that invested with us on one deal, they're like, all right, when's the next one? Right. And so we had to continue to find deals, meet with brokers. We did deals. And so we also are looking to, because we have a lot of repeat investors. So our investor avatar, if you want to call it that, there's two actually. One is busy professionals, right, that have high net worth, that just don't have the time, right? They want it. They know they need to invest in real estate. They don't have the time because they're actively running businesses, or they're a physician, or they're an IT professional, and they just don't have the time. So they rely on our expertise to be able to do that. The second is, similar, but, professionals that are starting out, they may not have, a lot of disposable income, but they're one of the things that in our community that we are challenged with is anytime you have, let's say $50,000 and you're like, hey, I need to invest this. The first thought that comes to mind is like, let me go buy a single family home, right? Mm-hmm. Because that's within reach, right? Of me.
That's right.
And so that's how we did it. That's how a lot of people within our network have done it. And all I want to do on our side is educate people that there is a different avenue. There's a more passive avenue where you can essentially, invest and take a very hands-off approach and still, in some cases, generate more return because the lion's share of the profits in a syndication go to the limited partner. And so, I wanted to educate people that there's a much more passive way to be able to scale rather than saying, hey, let me go buy, a duplex or let me go buy a single family and Airbnb it and do all of the work. Because that's how I went. And I'm trying to, we're trying to showcase people that, hey, there's a different avenue.
Yeah. You're giving them the easy button to get past all the work that you did to get to where you are. Right. Yeah. It makes total sense.
Right. Exactly right. And we focus on this concept of lifestyle investing that, I want to be able to invest and grow my family's income passively so that I can spend time on, the things that are important to me, whether that's family time, whether that's travel, whether that's giving back to my community, whatever that means for you. That's really, what drives you and what you're passionate about. So this is just a vehicle. This is just a tool to be able to get to do that sooner and more often, as opposed to working, 40, 50, 60 hours a week, until retirement. So, we had two kind of things in front of us, through two goals in front of us. One was align ourselves with operators that are experts in their field, whether that's, operators in a specific geography or a specific asset class. And then secondly, educating our own network that, hey, here's the easy button, right? Mm-hmm. And let's grow together, right?
Yeah. Makes total sense. So how have you found and connected with your avatar? And to take that a step further, after finding and connecting with them, how have you moved them into your ecosystem and, translated that into having them be an investor?
That's a great question. So our stories, because my story is, aligned with my avatar, right? So a busy professional wants to invest in real estate, doesn't want to retire when they're 65 plus, right? Wants to retire early and kind of leave, grow passively. So that was my story. So I took the reins of my, my life essentially and said, hey, no, there's got to be a better way. And I'm living proof of that, moving away and quitting my job after, 4 or 5 years of investing properly.
Yeah.
So I've been trying to tell that same story and connecting with avatars. And it could be an IT professional, it could be a physician, it could be anybody, right? Or a business owner. We connect a lot with, in my family alone, we have a lot of people that are business owners, and anytime they get disposable income, they buy another business. Right. But what ends up happening is they then need to work at that business. So they're buying a job. So they're buying one hotel, a second hotel, a third hotel. And ultimately what they're finding is as they're growing, their children, the next generation don't want to inherit those businesses because they don't want to do those operations. They want a much more passive, right, way of growing that wealth. And so we see a lot of business owners that are like, an aha moment for them is, hey, I have, 6 hotels that I've been running my whole life and my family doesn't want to take that on. So how do I offload this and get into a scenario where, I can invest these funds passively and have somebody else operate and we're generating that income. So it's really just having those conversations, right? And so podcasting and direct one-on-one conversations with folks that even a little bit of that story kind of resonates. That's been the key driving factor, right? Because we're all looking to do a lot of the same things, right? Live life on our own terms. essentially. And so anytime that resonates, and I'm living proof of that, right? That I've done it, that we're, I'm, like I said, my next goal is to retire my wife. She's still working her W-2. And so getting to a place where we can replace both incomes and just passively through real estate investing, that's kind of been the goal. So really just educating folks on how they can do it. It doesn't happen overnight, right? So that's the other thing, is that people need to recognize that there's no magic bullet, right? It doesn't happen overnight. It's not like one deal is going to get you there. It's really making sure you have multiple streams of passive income to be able to, fund your lifestyle the way it is, right? And so you can, if you're working, it's because you want to work, not because you have to work. So that's where I want people to kind of get to that point where even if they're working, they're a physician, that means something to them, or they're working in, whatever industry, it's because they want to, and that's they're passionate about that, not because they have to do that to provide for their family. Sure.
And then, you talk about education so much, which I think is just fantastic. What is it mainly through? Like, talk about how, your tools for educating and adding value that way.
Yeah. So we started, doing webinars on sort of, originally we were only doing multifamily investing. And so we would do like a multifamily 101. We would do local meetups. We'd host local meetups within our community as well. We're actually, this year, we're going to be doing some road trips. The thing about avatars, right? Your investor avatar is, when you connect with one, they are the ones that will connect you to others, right? So if they have a positive experience from what you've been able to provide them, they're the ones that are going to, set the stage for others, right? In their kind of network, to be able to link up with you. So we're actually doing some road trips where, we'll go and meet, and they'll host a dinner with, a few of their friends, and we just talk casually about, hey, what we've been able to do together. And really, that's really what it is. And there's folks that are starting out their investing journey, and some folks, they absolutely want to do that, kind of touch and feel. They want to be able to buy something, a duplex or an Airbnb or a single family, and spend the time on it. And we don't discourage that, right? Because if somebody wants to do that and they want to get that experience, we host events where we tell them the right way to do it, right? If you want to spend that time, if you want to be active, we want everyone to know what they're getting into, eyes wide open. So we don't discourage anything, because more power to you, right? And that's the beauty of real estate investing. There's, dozens of different ways that you can invest in real estate. Not one way is the right way, right? We're only sharing our experience, but there's plenty of people out there that are making money and doing things for their family. So we try to connect people together and educate them on different ways, different avenues that they can do what they need to do, right?
Sure. Yeah. Talk for a second for the capital raisers out there. Talk about your presence in terms of your click magnets and your landing pages and your email integrations, and like how do you have all that set up?
So we joined Raise Masters. Yeah, we joined Raise Masters earlier this year, so like January, February timeframe. Yeah. And so before that, we really didn't have a lot of that in place, right? Those are some of the things that we've been learning in that mastermind, right? So lead magnets and email integration and active campaign and all of that automation. We've just set that up this year. Okay. And so it's been a transformational year for Spur Equity. Before today, or before this year, we really didn't have a whole lot of sophistication in all of that automation. And we had a basic website. We had folks that could join our mail distribution, but we didn't have any segmentation. We didn't have any of the automation. We would just send out information as we would generate it, and we would be our own bottleneck, right? Because again, before this year, I was working full time. He was working full time, so it was really when we found time to be able to do that. So this year, it's been transformational for us to be able to take advantage of those automations, and that's what these masterminds allow us to do. Is talk with other folks like yourself and others that have been doing this and saying, here's an easy way, give us the easy button, right? And so we connected with people like Jason Wright and Derek, and as far as like our marketing and our email, and so we've been transforming that this year, and it's been paying off. So like a couple of deals that we did this year, we used those automations to be able to like do that deal flow and do those emails, and it saved us a ton of time, right? Because we're not having to go back to the tool and write our second email and our third email and send those out. Everything's been, it's sort of on autopilot, which is great. And our goal this year was make our investors' life a whole lot easier, right? Yeah. As well as make our life a whole lot easier, right? Mm-hmm. And so with that focus in mind, all of this sort of levers or little buttons that we pressed this year to make our process a little bit more sophisticated was focused on that. So we have a great portal, right? We have, all of our deals are on one portal. So that makes, again, our investor life a whole lot easier. So they could just go to one place and they see all their deals. They see everything. We have a lot of repeat investors. And so we've been focusing, making sure that everybody's on one platform for all of those things. So there's just a one-stop shop to do that. But yeah, I think marketing is going to be key this year. We've just started this. So we've launched our own podcast. I think the success that you've had over your, 200 plus episodes, I think you're at. So, we're trying to leverage that same thing by creating content and doing podcasts and getting, delivering value to our investors. And I think we're on the early side of that, but, I think that's going to really impact our growth, and that's what we're betting on.
Yeah, it will. And I can, you're just you're kind of a natural at this, honestly, as far as being able to verbalize and make somewhat complex concepts easy to understand, and translating that into a podcast is going to serve you really well, I think. And I think you're going to really enjoy it. For what it's worth, that was the most surprising thing about starting a podcast for me when I did it. Was within 3-4 weeks of starting it, I knew that I loved it and really loved it, and like it was this creative outlet that I didn't know I was missing in my life, and so it's become just something that I just truly love doing, and I think you're going to find the same way, because you're a very intellectual guy and great conversationalist, and you enjoy educating and you build a lot of value that way. Yeah. So I think you'll crush it with the podcast, man.
Thank you. I appreciate that. Education is really key to Rav and I. We want to make sure that we still continue to provide value, and I think this is going to be an avenue that we can certainly do that.
What's your social media presence like? And actually, before we go there, what you mentioned your portal. Where can investors find you online?
So our website is SpurEquity.com. So we're in San Antonio, so we had a little homage to Spur,
yeah,
right. Spur, but we're spurring equity also. So SpurEquity.com is our website. Our portal, we use Cashflow Portal. So SpurEquity.Cashflow Portal is our portal. And everything, all our handles are all Spur Equity. So Facebook, Instagram, it's all Facebook.com, Spur Equity. We're a little light, as we're getting started on social media and marketing. Again, we joined Raised Masters, and, we're understanding the value of marketing and the time commitment that's going to take. And so podcasting, repurposing that on social media, on Instagram, on Facebook, on LinkedIn, all of that. We're just starting to do that. But again, the podcast is going to help. So as we create content, we're going to repurpose that to be able to provide, short form value of the same concepts that that we share on podcasts. Right.
Yeah. Tremendous. It's good stuff. Where are you guys headed from here? What are your goals? What's your vision?
We started with simply multifamily investing. We really believe in that. And then we're still very bullish on multifamily, even though, this year has taken a dramatic turn, with the lender markets and interest rates and things like that. But, we try to listen to our avatar. And so when our avatar investors, especially the heavy hitters, get a little nervous about multifamily and debt, we look to diversify, right? So we want to be able to be a diversification partner for our investors rather than them having to look elsewhere. So we started to look at self-storage. We did some BTR. We have, we have existing assets. We also have new constructions that we're doing. So again, different risk profile. And we did our first land development project in North Carolina with a partner last year. And so we're trying to diversify and bring a lot more than just multifamily. Again, we're very bullish still on multifamily, but as people get nervous about stuff in the economy and in what's happening in the industry, we've introduced a new fund. So we're doing a lot of fund to fund models also that have built-in diversification. But we started an industrial fund this year, where we're purchasing absolute triple net industrial properties that we're hedging against inflation. So inflation hits our multifamily properties or any operating properties pretty heavy, right? So anytime taxes hit or utilities or insurance, all of those have inflationary pressure. And we've all felt it. And so we're going into absolute triple net industrial, which have 15 to 20 year leases built in with 2 to 3% in rent increases every year. But guess what? Our expenses are nil, right? So the tenants themselves are paying utilities, they're paying insurance, they're paying tax. So anything that hits from an inflation standpoint, our tenants are actually bearing that. So from our perspective, we have a very, very predictable curve on what we're going to make as part of this investment into industrial assets. And since we're creating a fund, since we're deploying this as a fund, we're purchasing 10 to 15 assets over the year, and so diversifying across different tenants as well with corporate guarantees. And so again, very low risk, easily predictable what we're going to make in terms of return on those investments. So, we're trying to diversify our own portfolio so that our investor avatar doesn't have to go elsewhere to invest their dollars. So we can have projects that are lined up for, different people with different risk tolerances and, what they're looking for, in investing in real estate.
Mm-hmm. Love it.
Yeah.
Awesome. Well, I one last question for you, but just to remind everybody, it's SpurEquity.com, Spur Equity on all the social medias. What do you do on social media these days? What's your program?
We use it for, obviously our public deals that are out there. We use that to market those, of course. Again, we're trying to do a lot of education. So anything that we can do in short form that provides a nugget of value. And I learned through social media as well, right? So when we look at, anything that we want to educate ourselves on, short form is the quickest, right? I mean, yes, you have to dive deep after that, but it grabs my attention, right? And then that allows me to then have that piece of knowledge in my forefront. And so I can then dive deep, into something. And so that's what we're trying to do on social media. Again, we're very early on, not a whole lot out there just yet, but we want to try to just use that as an educational platform and share nuggets of information that can be valuable, so that people don't necessarily have the hurdles and challenges that we've felt along the way, right? That when I failed my first time at investing in real estate, or when I didn't underwrite the deal properly, or when we didn't account for the expenses that we would have in rehab, for example. So these kinds of things are allow people to have their eyes completely wide open, knowing what they're getting into as they kind of venture in their own real estate journey.
Mm-hmm. Yeah, got it. All right. Well, this has been awesome. One last question for you. I'm going to put you on the spot here a little bit, but hopefully
Sure.
Not too badly. If you could go back to where you started in real estate, maybe not all the way back to 04, 06, but towards the beginning of like when you were getting into multifamily, and you could give yourself like just some real basic words of wisdom, coaching. What would you say to yourself at that point?
I'd say find people that are 2 to 3 years ahead of where you are currently, and surround yourself with those folks, right? You learn a lot. So, you mentioned the masterminds, and I'm a big believer in masterminds, but even just networking, being out there and learning from people that are a few steps ahead of you is so valuable. Right. Mm-hmm. And so I'm a very analytical guy. And so, I need information. I pull out the spreadsheets. I do the work and try to figure out, all right, how can this thing work? My partner, Rav, he's very different. He's very like, let's jump in. We'll figure it out. Yeah, we'll fail. We'll make mistakes. It's okay. We'll learn from those mistakes. Right. And so I give him props because he spurred me on. He spurred me on to act, right? To move forward and jump in. And so the thing that, and we have a saying, and he says, education is power, right? So learn from others, definitely, what you don't know, and learn from people that have done it. But action is a superpower, but it's still up to you to actually make it happen and act on it. No one's going to do it for you.
Yeah.
And so he pushed me, like I was, stuck in analysis, management consulting mode. And he's like, no, let's just go do it. Let's go purchase this. We'll figure it out along the way. We'll make mistakes, but we'll, and I call it failing forward. Yeah. We didn't do everything right the first time, but we still made out well. We still doubled our equity. We still, we failed forward. So I would say, if I were to go back is just surround myself with people and learn that process, and just jump in, right? Jump in, because you're not going to go wrong, especially when you surround yourself with people that are smarter than you. And what I found in this industry is everyone wants to see the other person succeed. That collaboration, that high-fiving each other when somebody gets a good deal. That's happened so many times with us, even with people that, again, you may view as competitors, but they're rooting for you too. So it's awesome.
Mm-hmm. Yeah. Love that. Love all that. Good stuff. Param, appreciate you so much. Listeners, Param Singh's been our guest today. Show him some love on social media. Go find Spur Equity. Check out their site. And Param, wish you all the best. Looking forward to continuing to collaborate in our mastermind together. And can't wait to see, talk to you in a year and see where you guys are then. That'd be awesome.
Awesome. Thanks, Tate. Really enjoyed being on.
Yeah, you're welcome. Loved having you. Listeners, loved having you as well. As always, appreciate you guys. And we're doing 2 a week, as always, as we have been for the last year and a half, at least, maybe 1 on 2 years now. So, and just really love bringing this to you. Don't ask for this much, but if you guys are inclined, leave us a rating and review on Spotify or Apple Podcasts or wherever you're listening. Helps us out a lot. So on that, we'll see you on the next episode, everybody. Take care.
This has been the Apartment Gurus with Tate Siemer. If you enjoyed this episode, be sure to subscribe and leave a rating and review on your favorite podcast platform. To contact Tate, go to www.investwithgreenlight.com for access to his investor portal and Calendly link. He loves to hear from you and thanks you for being a valued listener. Just a reminder that you are the guru. See you on the next episode of the Apartment Gurus.